Hello, Namaste. Welcome back to my easy and standard learning channel Akshara Academy, where you can learn many commerce concepts in a very easy method. So, I have already uploaded videos on many commerce concepts. If you have not yet watched those videos, you can check it. And in today's class, I have come with a new subject, that is assessment of non-individuals and filing of ITR. For now, this subject is there for BCom 6th semester and for KUD and for other universities also this subject has been introduced. So in today's class the topic I am covering is assessment of companies. It is also one of the important chapter in that subject. So there are two calculations we need to do in this chapter. One is computation of total income, one more is computation of MAT, that is minimum alternate tax. So these on these two concepts you can get questions, or together also they can give in a examination. So I have selected a problem where I am solving both the methods, but in examination whichever they ask you can do that. So let us start with the class. So what is minimum alternate tax? So many times what happens, the companies will be getting many deductions. So by using that, the tax payable amount becomes very lesser. So it is a kind of loss for the government. So what it is doing, it is telling that you have to calculate minimum alternate tax on adjusted total income where the deductions are not allowed apart from some of the deductions. So on that you are going to calculate a tax on a different tax slabs which is given, which are we are going to discuss in this video. And normal tax bracket also we are calculating a total income. We will we will take both the taxes and we will just compare them. So whichever is higher, that we are going to pay. Now if in case MAT is higher, then you will be getting tax credit. So these all things we will be I'll be explaining in the videos, what is tax credit, what is MAT, what is total income, how to calculate that, and while calculating what is the difference, all those things. So let us move to the video, but before that, if you have not yet subscribed my channel, subscribe it fast so that you will get a notification whenever I upload my new video. So let me share my screen first. In today's class, as we are discussing about assessment of companies, let us see the format first. So it is a format with two columns, that is particulars and amount, computation of total income under normal provision. So there are two methods to calculate a tax here. One is normal provision and one more is book profit will calculate, then will calculate a tax, that is MAT. So it is a format of total income under normal provision. You have to remember this. There is a difference between calculation in normal provision and book profit. In today's video, we will be getting to know what is the difference. So first we'll take profit as per P&L account. There is a similarity in calculation of this total income for partnership firm and companies. So the working pattern or the calculations remain same. First we'll take profit as per P&L account. We will add inadmissible expenses and we will minus admissible expenses which are not debited, and also some of the incomes under other head and exempted incomes. First one, profit as per P&L account, we have to take, add inadmissible expenses, अथवा we can say it as a disallowable expenses. Depreciation, so depreciation, how much amount is given, full amount we have to take. Revaluation depreciation, so how much is depreciation under revaluation. Sometimes the asset book value is a different, and after certain period there are certain methods to calculate a new value of the assets. So in that case, when we revaluate the assets, that time also some depreciation is arrived, that is called as a revaluation depreciation. Any penalties on the tax are there, we have to take them. And income tax we have to take. Proposed dividend we have to add. Provision for doubtful debt, any of the provisions, it may be provisions for doubtful debt or it may be provision for deferred tax, both we have to add. Wealth tax, so this is very important point in computation of total income under normal provision, we have to add wealth tax. Provision for losses of subsidy, so like when we take a subsidy, if there is any loss arrived from that, we have to add it. Provision for GST, so how much is the provision for GST? Full amount we have to take here. In bracket I have written here no difference in ascertained and unascertained. You will get to know what it is while explaining the book profit. Custom duty payable, transfer to general reserve. So these are the two different items. Any transfer to the reserves are there, we have to add them. And custom duty payable, it is not custom duty paid, there is a provision made. So custom duty payable, that we have to take. So these are the items to be added. Okay, next, deductible items. Depreciation as per rule. So this is also one of the very important concept, or one of the very important adjustment what we have to make. So in question, you will be having information. One is depreciation. For example, depreciation is 5 lakh and depreciation as per tax rule is 7 lakh. Then we have what we have to do. So while adding, we have to add 5 lakh, and while deducting how much is the depreciation as per rule. So that is 7 lakh, we can deduct that. If depreciation as per rule is not given in a question, and then both the sides 5 lakh. We'll add 5 lakh and we'll deduct a 5 lakh. Withdrawal from general reserve, if debited to P&L account, it is very important, and it is general reserve withdrawal. When it comes, if it is debited, then only we have to minus it. So without debiting to P&L account ಅಂತ ಏನಾದರೂ bracket ಅಲ್ಲಿ ಕೊಟ್ಟಿದ್ರೆ, we should not consider that. Withdrawal from revaluation reserve. So how much is a withdrawal amount? Directly we will take here. Okay, so in while calculating book profit, there is some adjustment to be made. But here, how much is the withdrawals from revaluation reserve? Full amount we have to take. Next, agricultural income. So if agricultural income is already credited to P&L account, then we have to minus it. And these last two concepts are very important. One is brought forwarded loss and one is unabsorbed depreciation. So on this, we are going to get a tax deduction. But in sometimes in a questions, they'll give brought forwarded losses and unabsorbed depreciation as per tax rule, and brought forwarded losses and unabsorbed depreciation as per account. So two will be given. So when both are given, then while calculating total income under normal provision, we have to consider tax purpose. So both we have to minus. Both we can deduct brought forwarded loss as per tax rule and unabsorbed depreciation. Let us see how to compute income under book profit method. So computation of book profit under section 115 JB. So this is a format. So almost all items adjustment will be same, but some of the adjustment there is a difference. We will see that in this format. First, profit and loss account ಅಲ್ಲಿ ಎಷ್ಟು profit ಕೊಟ್ಟಿದ್ದಾರೆ ಅಥವಾ loss ಕೊಟ್ಟಿದ್ದಾರೆ, as it is we have to take that. Next one, add. So add depreciation. So depreciation, how much amount is given in a question, as it is we have to add it. Revaluation depreciation, how much it is we have to add. Penalty, how much it is we have to add. Income tax, proposed dividend, provision for doubtful debt, provision for deferred tax, provision for losses of subsidy. There is no changes in adjustment of these items, as it is in total income also and book profit also. We will add all these items. Provision for GST unascertained. So any of the liabilities, while calculating book profit, any of the liabilities, if ascertained and unascertained is given, then we have to take only unascertained part. So for example, 35,000 is a provision for GST. Among that, only 20,000 is unascertained and remaining is ascertained. So while calculating normal income, we have to take full 35,000. But while calculating book profit under section 115 JB, we have to take only 20,000, which is unascertained. You have to remember this point. Next, minus part, deductions we have to do. Depreciation. So in while calculating normal provision, we have to take a depreciation as per tax rule. So for example, as I said, the depreciation will be 5 lakh rupees and depreciation as per tax rule will be 7 lakh rupees. In such a case, while calculating normal income, we'll take both. So like we will add 5 lakh rupees, but we will deduct 7 lakh rupees. But while calculating book profit, the depreciation which we will add and depreciation which we will deduct will be same. In that same example, depreciation 5 lakh rupees we have to add and depreciation 5 lakh rupees we have to deduct. Next, withdrawal from general reserve. if debited to P&L account, same thing will come here. So withdrawal from general reserve, how much is debited, that much amount we have to minus. Withdrawal from revaluation reserve, if it is in a total income calculation, directly we will take how much is a revaluation reserve. But while calculating book profit, we have to compare that with the depreciation on revaluation. So withdrawal from revaluation reserve or depreciation on revaluation, whichever is less, that we have to take. Again, you listen this: withdrawal from revaluation reserve or depreciation on revaluation, whichever is less. If in case withdrawal is not given, depreciation is 50,000, then withdrawal will be nil, 0. Depreciation will be 50,000. Whichever is less, it will be nil. Next, agricultural income is a exempted income. Any of the exempted. Sometimes they'll give it as interest on UTIs, athwa like agricultural income. Exempted incomes kottaga we have to minus it. In normal provision, we will take both brought forwarded loss and unabsorbed depreciation. But while calculating a book profit, we have to compare that brought forwarded loss or unabsorbed depreciation as per account purpose, whichever is less. So among these both, whichever is less, that we have to take. Let us see next part. So we are calculating this total income or book profit to calculate ultimate tax paid by the company. So there are two types of taxes. One is a tax rate under normal provision. When we calculate a total income of the firm, on that what tax will pay, that is called as a tax rate under normal provision. When we calculate a book profit, on that what tax we pay, that is called as a MAT. So under normal provision, tax rate is tax plus surcharge plus cess. So always the tax is 30% and cess is 4%. This is fixed for all the companies. Whatever may be the total income, tax rate is 30%, cess is 4%. There is a rules for surcharge. Let us see that. Surcharge. So if it is a domestic company, if total income is less than 1 crore, then nil. If the total income is 1 crore to 10 crore, then 7%. If the total income is more than 10 crore, 12%. For foreign company, it is nil, 2% and 5%. In majority of the problems, they will give you a domestic company. So you have to remember this. So less than 1 crore, nil. 1 crore to 10 crore, 7%. And more than 10 crore, 12%. So if in case the total income is less than 10 crore, but still in a question they have given you to take 12% surcharge, then take it. If tax rate is given in a question, how much they have given, take that. If it is not given, then you have to follow this table. So under normal provision, we will pay tax plus surcharge plus cess. Under MAT, if the total book profit is less than 1 crore, then 15.60%. If the book profit is 1 crore to 10 crore, then 16.692%. If the total income is more than 10 crore, then 17.472%. And the same we have for foreign companies also. The same rule is applicable here. If in case in the question they have given you the percentage, whatever percentage they have given you, calculate a tax on that only. If in case they have not given it, then only you take it as a if it is less than 1 crore 15.60, 1 crore to 10 crore 16.692, and more than 10 crore 7. So after calculating tax under normal provision and MAT, we have to compare that. Okay. So among the answer what we got, among the both, whichever is higher, that is a tax paid by the company. Listen this once again. So we have to calculate the tax under normal provision. The rate is 30% plus surcharge plus 4%. And we have to calculate a MAT on book profit according to these rates. So after we get the answer, we have to compare both. Whichever is higher, that is a tax payable by the company. If MAT is higher, then difference amount is treated as a tax rate. Think for example, normal provision tax is 1 lakh rupees and under MAT it is 2 lakh rupees. So we'll compare them both. Whichever is higher we have to take. Then 2 lakh will be ultimate tax payable by the company. In that case, so the difference 2 lakh minus 1 lakh, the difference of 1 lakh is called as a tax credit. It will be carry forwarded and it will set off in a future when normal profit is higher. Think for example next year the normal profit is 2 lakh and mat is 1 lakh, then that credit of 1 lakh rupees you can adjust in that year. Let us see problem number 1. Hira Sugars Limited, a domestic company, is engaged in manufacturing of sugar. The P&L account showed a net profit of rupees 80 lakh. So this is the first and foremost item which we will take in the format, that is the profit as per P&L account. Then depreciation 5 lakh rupees. So depreciation, what we have to do in normal provision we will add it, and in MAT also we will add it. Second item, depreciation on account of revaluation of asset 15,000. So while calculating normal provision we will add it, while calculating MAT also we will add it. Wealth tax rupees 1 lakh. So as I said, there is a different entry for wealth tax in normal provision and book profit. In a normal provision we will add it, while calculating book profit there is no entry of that particular item. Provision for losses of subsidy 15,000, we will add it in a normal provision and we will add it in a by add it in 15 JB book profit also. Provision for deferred tax 10,000, we will add it in a normal provision. Next, amount withdrawn from general reserve after debiting to P&L account. So as I said, any reserve withdrawal is there, then we have to deduct it, minus. Unabsorbed depreciation and brought forwarded losses, we have to minus them, but it is different for normal provision and book profit. I'll explain that while solving the problem. Depreciation as per rule 7 lakh rupees, we have to deduct it while calculating normal provision, but there is no entry in calculation of MAT. So we have to compute tax liability. So whenever they'll ask you compute the tax liability, you have to calculate a total income under normal provision, then we have to calculate book profit under MAT, then we have to compare them both. Let us see solution part. Computation of total income under normal provision. Profit as per P&L account 80 lakh rupees as given in a question. Add disallowable expenses, or we'll call it as a inadmissible expenses. In question there are some in what all we have written it as a add, those all items we have to take it here. So I also suggest you people to take a screenshot of a question or write down the question so that you can see the question while solving the problem. In the question there was a depreciation 5 lakh rupees, we have to take it as it is. Then revaluation depreciation 15,000, we have to take it. Provision for losses of subsidy 15,000, we have to add it. Provision for deferred tax 10,000 rupees, we have to add. So wealth tax under normal provision we are adding wealth tax, but while calculating book profit we will not add wealth tax. So for now we are adding it 1 lakh rupees. The total of all the items to be added is 6 lakh 40,000 rupees. So we will add it 80,000 plus 6 lakh 40,000. It will amount to 86 lakh 40,000. Then we'll come to deductible items. So first always remember we have to deduct the depreciation. So even if it is as per rule is given or no, whatever it may be, when we'll add a depreciation, we have to minus it. Depreciation as per rule 7 lakh rupees. Amount to withdrawn from general reserve. So it is after debiting only. So we have to take it 20,000 we have to deduct. Unabsorbed depreciation 50,000. Brought forwarded losses 70,000. So as I said in a normal provision both will come. Unabsorbed depreciation and brought forward loss both we can adjust. So we will total it. It will amount to 8 lakh 40,000. We have to deduct it from the 86 lakh 40,000. So we have to do 86 lakh 40,000 minus 8 lakh 40,000. So that is a total income under normal provision 78 lakh. So now on this 78 lakh we need to calculate tax. So tax payable under normal provision is 30% plus 0 plus 4%. So here they have not given in a question how much tax is to be paid. So 30% and 4% is common for all. But surcharge we need to decide on the total income. So in this problem, total income is 78 lakh, that is less than 1 crore. So when the income is less than 1 crore, the surcharge is 0. So take your calculator, 30 plus 4% if you do, it will be 31.2%. So directly you can calculate the tax 78 lakh into 31.2%. That will be 24 lakh 33,600. So now we have calculated the total income under normal provision. We'll calculate total book profit under section 115 JB. Some of the adjustment will be same as it is we have done in a total income. In some of the adjustment will be different. Profit as per P&L account as it is we have to take 80 lakh rupees. Depreciation we have to add these inadmissible expenses. Depreciation 5 lakh. Revaluation depreciation 15,000. Provision for losses of subsidy 15,000. Provision for deferred tax 10,000. We have to add all these items. 5,40,000. Under normal provision we have taken wealth tax, but under book profit we should not take wealth tax. So now the total will be 85,40,000. We'll see deductible items. Depreciation. Here depreciation we should not take as per rule. How much is added here? See, in this we have added 5 lakh rupees. Same 5 lakh rupees will come here. Amount withdrawn from general reserve as it is 20,000 we have to take. Amount withdrawn from revaluation reserve is actually not given in the question, but we have one information, that is revaluation depreciation. When among these two, amount withdrawn from revaluation reserve or revaluation depreciation, ಇವೆರಡರಲ್ಲಿ ಯಾವ್ದಾದ್ರು ಒಂದು ಕ್ವೆಶ್ಚನ್ ಅಲ್ಲಿ ಕೊಟ್ಟಿದ್ರು ನಾವು ಈ ಕಂಪ್ಯಾರಿಸನ್ ನ ಮಾಡಬೇಕಾಗುತ್ತೆ. That is amount withdrawn from revaluation reserve, that is 0, not given in a question, or revaluation depreciation 15,000. Whichever is less, we have to take that. So amount withdrawn from revaluation nil is less, we will take that. Brought forwarded losses and unabsorbed depreciation, both we will take in the calculation of total income. But in book profit, we have to compare them both. Whichever is less, that we are going to take. Brought forwarded losses or unabsorbed depreciation, whichever is less. In this question, brought forwarded losses is 70,000 or unabsorbed depreciation 50,000, whichever is less. We have to take 50,000. We will calculate total all of them and write it in the outer column. 5 lakh rupees plus 2 lakh rupees plus 50,000 rupees. So it will be 5,70,000. So we have to deduct that 5,70,000 from 85,40,000. So book profit under section 115 JB is 79,70,000. Now we have to calculate MAT, that is tax, minimum alternate tax payable. So as I have given you the table before only, we have to see what is a total income. So in this book profit is 7,97,000. Sorry, 79,70,000. That is less than 1 crore. So the MAT applicable is 15.60%. 79,70,000 into 15.60%, it will be 12,43,320. So under MAT, the tax payable is 12,43,320. So problem is not finished yet. We have a normal provision tax also, and we have a MAT also, which the company have to pay now. That we have to show it in the next table. Computation of tax liability. Tax payable under normal provision, that is 24,33,600. Tax or MAT payable, that is 12,43,320. Among this, whichever is higher is a tax liability. Before moving to next problem, we have to see some of the important point. Here I will be giving you what is a different adjustment of different items under normal provision and MAT. Let us see one by one. First adjustment is wealth tax. So if in a question wealth tax is given, under normal provision we have to add it. Under MAT there is no entry of wealth tax. We have to ignore that item. Next one, depreciation. If depreciation is given in a question, under normal provision we will add it. Under MAT also we will add it. Depreciation deduction. ಸೊ ಮೇಲ್ಗಡೆ ನಾವೇನು ಆಡ್ ಮಾಡ್ತಿರ್ತೀವಿ ಇನ್ಅಡ್ಮಿಸೇಬಲ್ ಎಕ್ಸ್ಪೆನ್ಸಸ್ ಅದ್ರಲ್ಲಿ ಏನು ಡಿಫ್ರೆನ್ಸ್ ಬರಲ್ಲ, ಬೋತ್ ದ ಸೈಡ್ಸ್ ವಿ ಹ್ಯಾವ್ ಟು ಆಡ್ ಇಟ್. ಬಟ್ ವೈಲ್ ಡಿಡಕ್ಟಿಂಗ್ ದ ಅಮೌಂಟ್ ದೇರ್ ಇಸ್ ಅ ಡಿಫ್ರೆಂಟ್. ಸೊ ನಾರ್ಮಲ್ ಪ್ರೊವಿಷನ್ ಅಲ್ಲಿ ಆಸ್ ಪರ್ ರೂಲ್ ಹೌ ಮಚ್ ಡೆಪ್ರಿಸಿಯೇಷನ್ ಇಸ್ ಗಿವನ್ that we have to minus. Under MAT, the same amount which we have added above, that only we have take. Again, I'll give an example for this. If depreciation paid is 5 lakh rupees and depreciation as per tax rule is 7 lakh rupees. Normal provision calculate ಮಾಡುವಾಗ ಏನು ಮಾಡಬೇಕು, 5 lakh rupees add ಮಾಡಬೇಕು, 7 lakh rupees minus ಮಾಡಬೇಕು. MAT calculate ಮಾಡುವಾಗ 7 lakh rupees ಏನು entry ಬರೋದಿಲ್ಲ. So we will add 5 lakh rupees and we will deduct 5 lakh rupees. Unabsorbed depreciation and business loss. So if unabsorbed depreciation and business loss is given in a question, under normal provision we have to minus both. So we have to minus both, and that too the tax purpose. So account purpose and tax purpose anteli ಬೇರೆ ಬೇರೆ unabsorbed depreciation and business loss ಕೊಟ್ಟಾಗ, so ನಾವು ನಾರ್ಮಲ್ ಪ್ರೊವಿಷನ್ ಅಲ್ಲಿ ಟ್ಯಾಕ್ಸ್ ಪರ್ಪಸ್ ಎಷ್ಟು ಡೆಪ್ರಿಸಿಯೇಷನ್ ಅಂಡ್ ಬಿಸ್ನೆಸ್ ಲಾಸ್ ಇದೆ ಅದನ್ನ ನಾವು ಮೈನಸ್ ಮಾಡಬೇಕು. And MAT ಅಲ್ಲಿ whichever is less, unabsorbed depreciation or business loss, whichever is less, that we have to minus. That to account purpose anta ಏನು ಕೊಟ್ಟಿರ್ತಾರೆ that we have to take. Withdrawal of revaluation reserve. If in case in a question withdrawal of revaluation reserve is given, then under normal provision we have to minus it directly. Under MAT we have to compare that with the revaluation depreciation. Withdrawal amount or revaluation depreciation, whichever is less, that we have to take. Withdrawal amount or revaluation depreciation, whichever is less. So if revaluation depreciation is given in a question, how to deduct that? So revaluation depreciation to separate agi enu deduction irodilla, deduction as per rule ಏನು ತಗೊಂಡಿದ್ದೀವಿ that is the ultimate one. But under MAT the same comparison must be done. One time only we will do for both the adjustments, withdrawal amount or revaluation depreciation, whichever is less. Problem number 2. From the following information, compute the tax payable by Z and company, keeping in a view the provision of MAT under section 115 JB for the assessment year 23-24. By seeing this question, you will get to know that you have to calculate a book profit. But we'll see the full question, then we'll get to know whether to calculate under both the methods or only one. So let us see one by one. Expenses on sale. So expenses on sale is a expenses relating to a business. It is a admissible expenses. So there is no entry of that particular adjustment. Salaries and wages. Salaries and wages is also relating to a business. So there is no entry of that. It is also unadmissible expenses. Depreciation. So depreciation we have to take, and we know, see, let me tell the question last. You see, compute the total income and total tax liability they have given. So as I said, whenever you get the word tax liability, then we have to calculate under both normal provision and book profit. And they have also given you to calculate total income, so we have to calculate both. Now coming back to depreciation. Depreciation we will add it in normal provision and also in MAT. Proposed dividend we have to add it in a both. So in normal provision also we have to add it, while calculating book profit also we have to add it. Income tax is also same, we have to add it in a both. Next, coming to credit side, sales. So sales is a admissible we can say income, and there is no adjustment of that, so there is no entry. Agricultural income is a exempted income. In both the sides we have to minus it. Dividend is a income from other source. So while calculating total income, so there is some adjustment need to be done. So other than a business, any incomes are there, while calculating a normal provision we have to minus it. In a MAT there is no entry of a dividend. Interest on security is also income from other source. Dividend is also income from other source. So that also we are going to deduct in a normal provision. Other informations. The company revalued the asset from 3 lakh to 6 lakh and provided a depreciation of rupees 75,000 on revalued assets included in the above amount. So the company have revalued the asset. The valuation of the asset was 3 lakh rupees. Now it has become a 6 lakh. But they have not given any information relating to withdrawal of a reserves. So this is a additional information. There is no adjustment relating to this. Next, they have given provided a depreciation on revaluation is 75,000. So revaluation depreciation ನಾವೇನ್ ಮಾಡ್ತೀವಿ, we will add it. Under normal provision also we will add it, and under MAT also we will add it. But what they have given, it is included in the above amount. It means what? So depreciation in 1,50,000 rupees ಕೊಟ್ಟಿದ್ದಾರೆ, ಅದರಲ್ಲಿ 75,000 rupees already add ಆಗಿದೆ. ಸೊ ಅದನ್ನ ನಾವು ಸೆಪರೇಟ್ ಆಗಿ ಮತ್ತೆ ರಿವ್ಯಾಲ್ಯೂಯೇಷನ್ ಡೆಪ್ರಿಸಿಯೇಷನ್ ಅಂತ ಹೇಳಿ ಬರೆಯೋದಿಲ್ಲ. ನೆಕ್ಸ್ಟ್, depreciation available under income tax act is rupees 90,000. So this is a depreciation as per rule. Normal provision alli ನಾವು calculate ಮಾಡುವಾಗ we will minus it. Next, brought forwarded loss as per books of account 2 lakh. So brought forwarded depreciation as per book of account is 50,000. As I already said, as per books of account ಅಂತ ಹೇಳಿ ಏನಿರುತ್ತೆ ಅದನ್ನ we will consider it for a MAT. And as per tax rule anta ಏನಿರುತ್ತೆ, that we will consider it for a normal provision. Computation of total income under normal provision. A statement with 3 columns, particulars, inner column and amount. First item we all know, that is profit as per P&L account. Yeah, one more thing I forgot to tell you. So the net profit ಎಷ್ಟು ಅಂತ ಹೇಳಿ ನಿಮಗೆ ಡೈರೆಕ್ಟ್ ಆಗಿ ಕ್ವೆಶ್ಚನ್ ಅಲ್ಲಿ ಗೊತ್ತಿಲ್ಲ, but we can see this statement. So in this statement, net profit 4 lakh rupees is there. We should not take a total amount. We should take net profit 4 lakh rupees. So this is very much helpful. So profit as per P&L account 4 lakh rupees. Add inadmissible expenses, depreciation 1,50,000, proposed dividend 2,50,000, income tax 1 lakh rupees. Total will be 5 lakh rupees. So question discuss ಮಾಡುವಾಗ ನಾನು ಆಲ್ರೆಡಿ ಮಾರ್ಕ್ ಮಾಡಿಸಿದ್ದೀನಿ. ಆಸ್ ಐ ಸೆಡ್, ಟೇಕ್ ಅ ಸ್ಕ್ರೀನ್ ಶಾಟ್ ಅಥವಾ ರೈಟ್ ಅ ಕ್ವೆಶ್ಚನ್. ಅಲ್ಲಿ ಯಾವುದನ್ನ ನಾವು ಆಡ್ ಅಂತ ಹೇಳಿ ಬರ್ದಿರ್ತೀವಿ, those items we have to take it here. Next, minus. The total will be 4 lakh plus 5 lakh, 9 lakh rupees. Depreciation as per tax rule. So in under normal provision now calculate ಮಾಡುವಾಗ we will take a depreciation as per tax rule, that is 90,000 given in a question. Agricultural income is a exempted income, 2 lakh rupees we have to take. Dividend is a income from other source. MAT calculate ಮಾಡುವಾಗ dividend and interest on securities ಇದ್ದು ಏನು ಎಂಟ್ರಿ ಬರೋದಿಲ್ಲ. But while calculating normal provision, dividend, capital gain, interest on securities ಅಂತ other heads ಏನಾದ್ರೂ income ಕೊಟ್ಟಿದ್ರೆ first we have to minus it. 20,000. Interest on securities 5,000. Unabsorbed depreciation as per tax ಎಷ್ಟಿದೆ ಅದನ್ನ ನಾವು ತಗೋಬೇಕು. Unabsorbed depreciation is 1 lakh rupees. Brought forwarded losses as per tax ಏನು ಕೊಟ್ಟಿಲ್ಲ, so we are not taking it. Total it 4,15,000. So we have to minus it from the 9 lakh. 9 lakh minus 4,15,000. Income from business will be 4,85,000. But ನಾವು ಇಲ್ಲಿ only business income calculate ಮಾಡ್ತಾ ಇಲ್ಲ. So you can see this. Computation of total income. So we need a total income. We need a income from all the heads. So income from business is 4,85,000. We have some other heads also that we have to take it again. Income from other sources. Dividend 20,000. Proposed dividend or interest on securities 5,000. 25,000 will be a answer. We have to total it. So total income will be 5,10,000. ಸೊ ನಾವು ಡಿವಿಡೆಂಡ್ ಇದ್ದು ಅಂಡ್ ಇಂಟ್ರೆಸ್ಟ್ ಆನ್ ಸೆಕ್ಯೂರಿಟೀಸ್ ಇದ್ದು ಮೇಲ್ಗಡೆ ಡಿಡಕ್ಟು ಮಾಡಲಿಲ್ಲ ಅಂಡ್ ಆಡು ಮಾಡಲಿಲ್ಲ ಅಂದ್ರೆ ವಿ ವಿಲ್ ಗೆಟ್ ಎ ಸೇಮ್ ಆನ್ಸರ್. ಬಟ್ ಇಟ್ ಇಸ್ ಅ ಪ್ರೊಸೀಜರ್. ಫಸ್ಟ್ ವಿ ಹ್ಯಾವ್ ಟು ಕ್ಯಾಲ್ಕುಲೇಟ್ ಇನ್ಕಮ್ ಫ್ರಮ್ ಬಿಸ್ನೆಸ್, ದೆನ್ ವಿ ಹ್ಯಾವ್ ಟು ಆಡ್ ಇನ್ಕಮ್ ಫ್ರಮ್ ಅದರ್ ಸೋರ್ಸಸ್, ದೆನ್ ವಿ ವಿಲ್ ಗೆಟ್ ಅ ಟೋಟಲ್ ಇನ್ಕಮ್. Tax we will calculate later. So let us calculate book profit now. Computation of book profit under section 115 JB. Again a statement with 3 columns, particulars, inner column and amount. Profit as per P&L account 4 lakh rupees given in a question. Inadmissible expenses, depreciation 1,50,000, proposed dividend 2,50,000, income tax 1 lakh rupees. So these 3 items we have to add. It will be 5 lakh, total will be 9 lakh. So there is no difference in this it is same as a normal provision. Deductible items, depreciation. So 1,50,000 is a total depreciation which we have written here. But in that revaluation depreciation is included. So question ಓದಬೇಕಾದ್ರೆ ನಾನು ಹೇಳಿದ್ದೆ ನಿಮಗೆ. So 75,000 revaluation depreciation is included in the above amount ಅಂತ ಹೇಳಿ ಕೊಟ್ಟಿದ್ದಾರೆ. So in this 1,50,000 minus 75,000, that is revaluation depreciation, remaining 75,000 we have to take. Agricultural income, exempted income 2 lakh rupees we have to take. Now withdrawal of revaluation, question ಅಲ್ಲಿ withdrawal of revaluation ಕೊಟ್ಟಿಲ್ಲ, but we have a depreciation on revaluation. As I said, depreciation on revaluation ಅಥವಾ revaluation reserve ಎರಡರಲ್ಲಿ ಯಾವುದೇ ಒಂದು ಪಾಯಿಂಟ್ ಅನ್ನ ಕೊಟ್ಟಿದ್ರು ಕೂಡ we have to take it. So withdrawal from revaluation is nil, or revaluation depreciation is 75,000, whichever is less, so nil. Next, unabsorbed depreciation as per tax rule or business loss as per account. So it is actually unabsorbed depreciation as per account and business loss as per account. We have to take it, and unabsorbed depreciation is 50,000, business loss is 2 lakh. Whichever is less we have to take, that is 50,000. Total it 3,25,000. So 9 lakh minus 3,25,000, book profit will be 5,75,000. So now we got a total income and book profit. So this is Priya Gujmagdi ending up this chapter by saying that both the methods of calculating tax, that is normal provision and MAT, are explained in today's class. So if you have any doubts, you can put it in a chat box so that I will clarify your doubts. I hope the concepts are clear. In my next video, I will come with the next chapter. And as I said already, assessment of partnership firm is uploaded. You can watch that video. So please practice the problems. Thank you for watching my video, and thank you so much.